Hi guys, welcome back to X and Yung. Today I'm going to talk about ROI, which is return on investment. So as an investor, this is very important to understand, right? So 2 weeks back, I was inspired to create this video because I met Kelvin Learns Investing, and then he knows a lot about these options and stocks, but then he is like reluctant to understand more about property. For a simple reason, because he said the ROI for property is very low, right, compared with stocks. Even the S&P 500 goes up 10% per annum, right? S&P 500 is of course the benchmark for all investors, right, especially stock investors. Is the benchmark because it can give a average return of 10% per annum. Per annum means per year, right? So imagine you're putting a $1,000 investment into the S&P 500. So you would expect at the end of the year, this $1,000 would become $1,100, right? That's 10% per annum. Okay. So of course, why people don't put money into property is because when they hear that the capital gains is actually 5%, right, per annum. So obviously if you compare it apple to apple, 5% per annum doesn't sound so exciting as 10% per annum, correct? And some stocks, especially those blue chips one, they go even higher than 10% per annum, some even 30% per annum. So of course 5% per annum doesn't sound exciting. However, most people don't really understand that when you buy property, most likely you are going to take a mortgage, correct? Take a mortgage to pay for the property, right? So you would only put a small down payment or initial investment of 10%, and that's it, right? Most of it is paid by other people's money, which in this case is the bank, right? The bank lends you the bulk of the money to purchase the property. So if you buy a stock, you can also do it via leverage, which is via options or futures. But then, you know, if you buy using options and futures, you know that it's mostly short term, and the fluctuations of the market in the stock market is quite high, and you would get burnt very easily, right? Compare with the market in property. Property moves pretty slowly, I would say, because the transaction is really very slow, like at least 3 months all the way up to 1 year, the transaction, right? Averaging around 6 months of transaction. So of course, that's why the property price goes up and down very slowly, and even so, you would have the option to just hold the property, right? Because the property, you can stay in it, you can live in it, you can also rent it out. So you have many options as a property owner. But then again, 5% and 10%, of course, there is a big difference lah. So let's debunk that myth that 5% is quite low. Okay, so let's say you were having a $1 million property. Okay, $1 million property, and you put a down payment of only 10%, right? Initial investment. So how much is your initial investment? It would be 100,000, correct? 100,000 for a $1 million property. Now imagine now is May, at the time of recording this video is May 2022, and I would to sell this property within 5 years, so that would be May 2027, correct? Okay, and I would own a property of $1 million. Okay, let's draw the small cute house, and deposit or down payment or initial investment of 100,000, right? 100k. Now since the property prices on average increase about 5% in Singapore, you would expect 1 million in 2022. By the time it reaches 2023, it would be 1,050,000. Okay, 1,050,000 times 1.05, which is another 5%, 1,102,500 2024, then times 1.05 become 1,157,625 2025, 1.05, 1,215,506 2026, then times 1.05, 1,276,281, that's 2027. Correct. Okay, so your $1 million grows at 5% per annum. It will be $1,276,281 by 2027. Okay, so how do you calculate ROI? Very simple. This amount 1,276,281 minus your 1 million, right? That's how you gain the profits, the capital gains. So 276,281 divided by how much did you actually put in? You did not put in 1 million as your initial down payment or initial deposit, right? Initial investment. You only put in 100,000, right? So that 100,000, you divide it by the profit. The profit divided by your 100,000 times 100. That's how you calculate ROI, right? So 276,281 divided by 100,000, okay, correct, times 100. So it's a 276%, right? 276% over 5 years. So you still have to divide it by 5 years. So your actual number would be 55% per annum. Okay. So 55% per annum. Does it sound exciting? S&P is 10% per annum, but property is 55%. Let me reiterate, it's a Singapore property. It's actually a commercial unit. Okay, commercial industrial unit. Okay, so yeah, I mean, you can weigh the difference, 55% per annum and 10% per annum. You know, if me, I'll go for the higher one. Right? So one of my property is like this, because I got one Singapore industrial property, and it has already increased in price by 15% capital gains over 3 years. So it's in line with the average of 5% per year of capital gain. And yeah, I'm looking at something around 30+% per annum. So that's quite high, right? No, don't disturb me.
I didn't catch that. Could you try again?
Okay, sorry. Siri is disturbing me.
No need to apologize.
Siri, hope this inspired you to purchase property also, not only all on stocks, you know, because property is actually very exciting because of the leverage that you can borrow from the bank and, you know, use other people's money, right? Like what Robert Kiyosaki say, like OPM, use other people's money to purchase property. Okay, so that's it, guys. You have learned how to earn from property via capital gains only, and you can understand that the ROI for property is very high. So do like and subscribe and catch us in another video. Thank you.